Wondering what help's available to your small business during this pandemic? Well, in this video, I run you through the latest announcements of all the support measures from the Winter Economy Plan. As a business accountant, my team and I spent all day long helping business owners on their journey. And in this particular COVID pandemic, we've had so much information, support, changes, measures to review and talk about that today is no different. So we're just off the back of the Chancellor's Winter Economy Plan speech. It's a bit of a mouthful and also not particularly exciting for most people, I'm sure, with the wording, but for small businesses, there's some really good changes. There's also some not so great changes, and I'm going to talk about that throughout the whole of the video. So I'm going to start with the awesome stuff and finish probably with the not so good stuff. So if you enjoy these type of videos, make sure to click the subscribe button below so you get notified whenever we release another one. Now, before we get right into it, I just want to say that I'm recording this video straight off the back of the speech. So we've only got limited guidance, and I'm sure as more detail comes in the next week or so, we'll be recording more of these and getting them out for you so you can break down each of the individual parts. But this video is really just a summary of where we're at and some initial thoughts from me on what I think the impact will be on small business. So the first one for many of the self-employed business owners that are going to be watching this that will be relatively excited is they've announced that the Self-Employed Income Support Scheme, as it's known, which for most people they just refer to it as the Self-Employed Grant Scheme. They've already had a couple of grants. They've now announced grants 3 and 4. Now that sounds quite exciting, except that in order to bring it in line with the kind of support they're doing for employees, which we'll touch on later, it means that the third grant is only going to be 20% of your average trading profits. Now we did another video on how the Self-Employed Income Support Scheme works. The eligibility criteria has not changed, which is quite a sad fact at the moment. So there's a lot of people that were left out in the cold from this because of where they chose to draw the line. And unfortunately, they're not at this point altering that line. So it's still the same. If you didn't get grants 1 and 2 because you weren't eligible, unfortunately, grants 3 at least aren't going to be eligible for you. And I can't see at the minute that grant 4 is going to be any different. But at the minute, it's 20% of your trading profits. And it's meant to cover November, December, January. At the minute, as we're recording this, there's no dates on how you apply, when you can apply. But previously, it was just a very quick online form. They worked it out and they paid you what they thought based on your tax return history. So I don't see that changing. So that's where we are with that. It's capped at £1,875. I'd say for most people, it's not going to be anywhere near that, but that is the upper cap. And when it is paid out, it's going to be paid out in one instalment as it has been before. The 4th grant that's meant to cover sort of February, March, April, again, it says at the minute the level hasn't been set. So we don't know what that's going to be. I don't think anyone knows really, but if it's 20% now, I don't know what level actually makes it useful at that stage because it's going to get quite small, I'm sure. But anyway, anything's nice at this stage. So we'll keep an eye on that. And of course, we'll let you know as the news happens. Now, for me, one of the most exciting parts of the announcement and the speech was the fact there's quite a lot of things that are going to really impact cash flow in a business. Now, if you've watched any of my videos on the channel, you'll know that as a result, I quite believe that cash flow is massively important for businesses, and some of the early changes they had with the support in terms of being able to delay your VAT or your personal tax and bounce back loans and coronavirus interruption loans. All these things were really good support mechanisms that got money quickly to business. I think out of all of them, for me, the type of businesses we deal with, they've been the most impactful. And what was great to see is there's been some further changes and tweaks to those to make them even better. So let's start with the bounce back loans. Now, the bounce back loans at the minute was a 6-year loan. And we've done another video, plenty of videos, in fact, on bounce back loans that you can go and see. And I'm sure there'll be more. However, just in summary, they were a 6-year loan. You are now going to have the option to pay them over 10 years. And that includes the people that have already got them. How that is done, we don't know yet. I'm presuming it'll be done via your bank somehow because that's how the loans have been dealt with. But at the moment, the news is, 6 to 10 years, that massively lowers your repayments. So like on a 50 grand loan, you're looking at paying maybe about £850 a year back, a month back every month. And that's going to obviously cut right down if you then extend it to 10 years. So that's really good. You're also going to be able to apply for a payment holiday. So you can actually stop any repayments up to 6 months, which is great. You can only use that once and they'll only let you do that after you've made at least 6 payments, but that's great. They're also said in the speech that's not going to affect your credit record, which is an interesting thing. They're also going to give you the option of a couple of times you can switch to interest only. And again, we'll wait to see the actual details of how you do that. But again, that's another option. So I think if you look at that as a combined measure, that's fantastic. That really does give you, if you're still really struggling to get out of where you're at the moment, it's going to give you some time before you have to repay. Because for a lot of people, what's going to happen is around March, April, May, there was going to be a massive cliff edge of, okay, now you've got to start repaying your bounce back loans. You've also, if you deferred your VAT, so that probably leads us on to the next bit. If you deferred your VAT, and so from the period from March to June, if you had any VAT in those periods that were due, you could delay it and not pay it until March 21. They've now said, actually, we know that's a cliff edge, so we're going to allow you to split that in 11 instalments over that year, over the 2021 year. Now that's phenomenal, because for a lot of people and a lot of businesses we deal with, in the back of their mind they're thinking, I've got this massive chunk of VAT, I've not recovered enough yet, how can I deal with that? Well, now you're going to be able to split it over. So that's not going to be automatic like the deferral, you're going to have to opt in, and at the minute there's no real news yet on how that's going to look, but again, we'll update as it comes. But that's great news. Now, while we're talking about tax deferrals, if you had any personal tax to pay, so you're a sole trader, or actually it didn't really matter, you didn't need to be a sole trader, but if you did a tax return and you had up to £30,000 of debt to pay in January. Firstly, they delayed it from July. So in July 20, you might have had to make a second payment on account if you paid twice a year. They said, don't worry about it. Pay us in January 21 with the rest of your tax, which actually, for lots of other reasons, makes complete sense. But what they've said is, if you're really going to struggle then in Jan, we're now going to give you another 12 months to pay. So again, there's going to be a system to do this, but it's going to mean you're going to be able to spread those payments as well. So again, this massive cliff edge. You had some business owners, let's say you're a limited company owner and you had personal tax due, you had your VAT that was due, and it was all going to come in around January, March. It was going to be a horrendous time. You're now going to be able to spread that load again. So it's not going to go away, but for me, they're phenomenally good changes for a lot of the business owners out there that were looking at this cliff edge. Now, if you're in one of those categories where you took a coronavirus business interruption loan, or CBILS as they're often referred to, they're the bigger ones where you might have taken like 250 grand. They're at the minute saying they're going to make lenders look at that 10-year option as well. They haven't talked about the payment holidays or anything else, they're just talking about this 10-year window. So at the minute, there's no real deadline, there's no real details on that. That was just something announced in the speech that they're going to talk to lenders about doing this. So again, more on that as it comes. And then another bit of good news, if you're in the hospitality industry, tourism, leisure, that kind of stuff, you're still going to be able to use this reduced rate VAT that's out at the moment. So that applies to food and non-alcoholic drinks in the main, in restaurants, pubs and the like, and accommodation and admission to attractions in the UK. So that's still ongoing at the moment and will continue to be ongoing until 31st of March 2021 at the moment. So I want to finish up. So they're all great things. So I want to finish up on one of the things that is not particularly great in my eyes at the moment, having done the quick and dirty maths last night, being the kind of exciting individual I am. I sat there with a spreadsheet in bed playing around with different scenarios. And so there was a furlough scheme, the job retention scheme as it's known, and that's been pretty good, I think, for most people. I think everybody's appreciated how that's worked. It's been an absolute mania for employers and payroll providers to work that all out and get it all sorted, but for the actual employees and the businesses, it's been a fantastic support system. That's disappearing at the end of October, and what they're replacing it with is the job support scheme. Now, the job support scheme is vastly less exciting from what we've seen at the moment. It's actually fairly difficult to understand to a degree, but if you imagine you had a full-time worker, that what they can do at the minute is you can say, okay, well, we haven't really got a job for you yet, but we think it's coming back. And at the minute, that's the bit I'm struggling to see personally, is what this is designed, what kind of situation this is actually designed for. And that's been a difficulty. So at the minute, if you've got a full-time employee, you can say to them, right, we'll just work 33% of your hours. I know, stay with me, just 33%. So if you were doing like 37 hours a week, you might do around 12 hours a week instead. Now, for the employee, they're going to get paid 77% of their normal full-time wage. So, okay, they're working 12 hours, getting 77% of their wage. It's a bit of a weird one because you might not be able to survive on 77% of your wage, but at the same time, you're only working 12 hours in this case. So you can, in theory, take another job. Like, it's an interesting scenario. That's there. But the employer still has to pay quite a chunk of this. So the way it works is that the employer will end up paying about 55% of the normal wages, but only get you for 33% of the time. And again, there's going to be another video on this in depth to explain why that's the case. But if you just think as an employer, you're going to be paying more than you're getting. And that is a problem for a lot of employers when they're looking at using this scheme. The government's basically funding the sum of the unworked hours. So the employee will get paid the 33% that they're actually getting. So the employer's got no problem with that because you're getting your 33% like you would normally, you're paying them per hour. Then you've got to then top them up a little bit for a third of the unpaid stuff. And then the government's going to top up a third of the unpaid stuff, and the other third they're not getting paid. So that is a mouthful and a lot of stats. But if you just think at the minute as an employer, if you're listening to this as a small business employer, you're going to be paying 55% upwards to get 33% of the work. And for me, that's the biggest issue. But we'll see. Again, this is a complete reaction straight after we've seen what we've got at the moment. More detail could come out looking at that. The other thing that's quite clear from the briefing notes is you can't claim pension or employer's NI cost, which is quite a large part of employing somebody. And at the minute, there's no support for that, where there was in the original furlough scheme. So there we go. So that's the replacement. A lot more in that on it comes, and I'd suggest following us on all the social medias because we'll have graphics and guides and all that stuff just to talk you through a bit more to help you understand. I could see there was a lot of talk in the initial reaction on Twitter and other things where people just did not get this. And to be honest, even I had to take it to a spreadsheet to really grasp what was being said. And that's it right now. That's a whistle-stop tour, a bit of a longer video than usual, but I just wanted to run through all the key things that's going on right now. Again, we're going to be breaking these down individually, especially as more details come around deadlines and how you actually do it. They'll be on the channel, I'm sure. So thanks very much. If you enjoy this video, be sure to check out all the other ones on the channels, like, share and subscribe, and give it to anybody in your network that you might think would find this useful. Until the next one, I'll see you next time.